much, Diana. If you're looking to get in on hot IPO action, here's a first-of-its-kind web community that allows people to list, buy, and sell shares before they're even listed. CBC's Silicon Valley Bureau Chief Jim Goldman joins us now with more on this story. Jim, tell us about this.
Yeah, Melissa, talk about a sign of the times. During the bubble years, IPOs and red-hot companies were like gold for investors and for employees who got pre-IPO shares as part of their compensation. With the IPO market essentially closed these last couple of years, employees haven't been able to unlock any real value, but that's changing. Web communities like sharespost.com have become a kind of eBay for pre-IPO buying and selling. 10,000 subscribers at $34 a month right now have access to something like $300 million worth of stock from companies that have not yet gone public, listed by insiders and former insiders, and business has been brisk. Names like Facebook, Twitter, Zynga, Tesla, eHarmony, and dozens of others. It's all legal and in most cases done with the company's blessings and, SharesPost says, safe.
We partnered with U.S. Bank to be the escrow provider for our transactions. And so if you're a buyer, you would fund the escrow, a U.S. Bank account. And U.S. Bank then does the work of getting the shares transferred from the seller to the buyer and a new stock certificate issued. So you as a buyer know that your funds would never be released to the seller unless U.S. Bank was sure that the shares had actually been transferred to you.
Now, SharesPost competitor Second Market has seen explosive growth, going from about $25 million worth of these transactions during the summer to over $125 million since, and now boasts 7,000 accredited investors doing business in 7 different asset classes. Private investors like Lawrence Butler in Southern California, for one, well, he recognizes the risk of investing in pre-IPO companies, but he's pulled together now $1 million already, all in what he calls blue-chip companies ready to go public.
So when the company goes public, being a shareholder, I'll be able to participate in the IPO with the same restrictions as other inside shareholders. But it is, in a sense, a way to own the hot IPOs before they even become hot IPOs.
Yeah, those involved in all this do say it's a win-win. Employees no longer have to wait to unlock the value of their equity in pre-public companies, and investors get a chance to roll the dice on what could be the next big thing on Wall Street. Larry?
All right, Jeff.